Um, it's just in a lot of people's mindset, we don't believe that kind of stuff is possible. Um, but it's just kind of long-term targets. So I'm gonna go ahead and just start. I guess you guys are the ones that will be present today. If someone else joins, that'll be cool.
Yeah, I think Crimson joined.
Yeah, he's in. Bro, KB, did you
Yeah,
post a
yeah.
freak Samet? I think Samet posted a fake post.
Yeah, I clicked on it thinking it was like what do you call it? Like where it's like grayed out, but you can click on it and then it reveals the letters, like spoiler tagged or something. But it's not. It's just
Is that
fake.
it? Nope,
Yeah.
it's just a troll. All right, so we're gonna start here. Um, Now what I want to talk about is just long-term targets. One thing I've told you guys in the past, um, is the left always gets balanced out with the right before we can either have a continuation in this direction or we can move back in the other direction. Because as you're going to see right here, we had this move to the upside, pushing us to all-time highs. And what did the market do after that? It came back and balanced out everything on the left with everything on the right. And then as you'll see here, what did the market do following that? It balanced everything on the left here with everything on the right, with us pushing up further into all-time highs. So the market is always going to balance itself long term in order to push higher and push lower. Now, a lot of the time, just because we see targets further down, yes, those are the next liquidity points, but the market may not always go for that. Like it could have easily gone for all this right here. But it depends on what the market considers balanced at the time. Because you'll see over here the market pushed further down. Um, but at that time period, the market was considered balanced below, so it could push higher. Now, when we look at this, where where do you see where do you see the I mean it's already right in front of your face, but where do you see the last low before we have this huge push up?
It was around
Anyone?
18,800.
Yes. Obviously, I've already drawn it out.
Yeah.
Um, but I want to get y'all's minds thinking in this process. Now, during that time, we created an opening week gap right here. So the market left a gap in this area, which was an imbalance. So when we pushed to all-time highs, I couldn't call this target out. The only target you would be able to really call is this one right here because that's the furthest we had pushed at the time being. So this all right here is just going off of standard deviation. Now, when the market finally decided to make its move to rebalance the left side, we have these targets here, 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 and here, of course. But the real target that the market's going to need to reach for is where? The very last low that we made before we pushed higher. What else is in that area? An opening week gap that needs to be closed. So the market came down and was able to balance out everything over here with all of this, closing this opening week gap, sweeping this low, meaning what? Now everything on the left is balanced with everything on the right. Now, if the market wants to continue further down, it can. But confirmation was us staying above this opening week gap after we swept this low. So that means now if the market wants to go up, well, then where would our long-term target want to be? Long-term target would be here. Now, of course, we're not just going to enter into a trade for a few days to weeks, unless we have a live account that can do that. But this is going to be our overall long-term target. Now, of course, our first target would be this high. Our next target would be this one, and this one, and so forth, because that is more capable and possible of happening each day. Um, so that would be the overall long-term target. Because now what has to happen? Well, if this is considered balance below, well, then that means we have imbalances above. So in order for the market to rebalance to the upside, it's going to need to go from where? The last high we had before the push down. This was the very last high before we had this explosive move to the downside. So the market's going to want to reach for that. And it took a little over 2 months to, to reach that. But that's the overall move that the market's going to want to make. It's really important that we pay attention to, okay, when we had this huge move up, when we had this huge move down, where was the last high? Where was the last low that we had before we had the major push in that direction? This was the last low before we had this explosive push up and we made our way to this high, all-time highs. This was the last high that we had before we had this explosive move down and covered everything over here. So we continued to push up, push up. We took this high. Market continued pushing into all-time highs. Once market reached all-time highs again, that's when we had this balance, this rebalance. Well, that's when market was now considered. Can you chill, bro? I'm trying to teach a class. I don't got time to play right now with you. Sorry. My cat always wants attention, bro, whenever I freaking get on the computer. But so, and whenever we get all-time highs, I'm waiting for sells because Brandon. Is it Brennan or Brandon? Because you have him as Brandon on here, but in the Discord, he has a Brennan. Do you have multiple personality disorder? Burn, burn it. Okay, I'm gonna have to put this animal up while I try to do this because I can't deal with him right now. Sorry, buddy. It's my incognito name. Okay, so market pushed to all-time highs, left a lot of liquidity below. So of course, we're gonna look at this on the long-term scale. Where do you see the very last low before that we had this move to the upside?
Well, it'd still be that around like 18,800, like the one you have marked
Yes,
out.
sir. Yes, sir. That's what I want. Why is that though?
Because that was
What happened? What
it
happened here?
it swept the previous low's liquidity before pushing up.
But what also happened in this area? What makes this significant?
The first untapped fair value gap and the first order block, basically.
Yes and no. But do y'all see the explosive move we had here? We have this very last low and then an explosive move up.
Oh yeah, yeah. I see that
It's
compared
the
to the
very
other
last,
lows.
it's
Yeah.
the, yeah, it's the very last low we had before this explosive move up. So the market is now, what it's going to do is long term, it's going to need to balance all of this out of all this here. So long-term goal, if we're at all-time highs and you're bearish, you don't have to just be like, okay, this is the one it's going to go for. But you can see, okay, well, if the market was stopped here and was considered balanced to the downside at that time, well, then this could be the possible target that it reaches for. If it was balanced here and pushed up. Well, of course, along the way, because we can't do this doesn't happen in one day, we have different targets that we can set up. We have this low, we have this one. That's the next liquidity. If the market's going to continue further down, that's the next one here. The market's going to continue further down, that's the next one here, and the next one here. These are relative right here, so you could attack this one over this one. The market's going to continue pushing lower. We got these equal lows that are right here. Market's going to continue further down. It's going to push down to these next one, this next point, this next point, this next point, this next point, this next point. Now, I don't know if y'all remember this back in April. This is when we went from 24,000 and dropped $7,000 on the NASDAQ. But this was a lot due to news. If y'all remember that. Um, but these would be the target point below. Now, when it pushed down into this area here, I want y'all to see this. What do we see here? Can anyone identify this for me? Yes, sir. Breaker block. So this high tapped off with this low. And what does that tell us since it stopped there?
It's another form of rebalance. Market is supposed to go higher.
Yes, so the price is bounced to the downside at that time. Market doesn't need to go further down, it can go higher. Now, Brandon, we're supposed to be making YouTube videos. I can't do that if you're putting this stuff in there. Um, but you see what no, you're not lying. Uh, you see what I've switched to though, right? Regular trading hours. You know, I don't know, and I've shared this before. I don't know if anyone does it. What if, let's see if anyone remembers. What have I talked about at the beginning of market open? No. At the beginning of the market open, swapping to regular trading hours is what you are wanting to do. When the market first opens, for the first 30 minutes, 45 minutes, I'm using regular trading hours. The market that's what the market sees as regular trading hours at market open. It's not seeing electronic trading hours. It's seeing regular trading hours. And the reason I say that is look, this candle right here is 9:30 market open, right? Look how it respected this breaker block. Now, if I switch to electronic trading hours, we don't see that. And that's because the market doesn't see it. But also, but that's why at market open, you want to use regular trading hours for the first 15, 30, 45 minutes. Because that's what the market is paying attention to. It's not paying attention to regular electronic trading hours. It's seeing regular. Because I can sit here and explain this to you. Look at that. That breaker block right there is gorgeous. I can't sit here and explain this to you because this doesn't make sense. Not at all. But this does. So make sure that's something you guys are doing when y'all are trading market open. I start with regular trading hours. I don't know if that's something that y'all have done, but considering the fact that the market was balanced and respected that breaker, that tells us price is balanced below. The market doesn't need to continue lower. So then what would my targets be to the upside? Well, of course, my first major target is going to be this. And the reason why is because this is the very last high that we had before it slammed down. So the market's going to want to push and balance out everything that is through here, everything through here. Well, if price is telling us that the market is balanced to the downside right now, well then overall target long term could be back to all-time highs unless we are given a reason otherwise. But if on the 4 hour we're looking at this and it's telling us prices bounce below, well then we can set targets for this liquidity, this one, these, all the way up into here. I drew that just so y'all could see like an example of like we took all-time highs. Now if the market wants to go down, well this is where we could enter right here. I hate all-time highs, bro. All-time highs suck. So what's happening? The market is now balancing everything here through everything here. What did it do earlier? The market balanced everything through here with everything through here. Well, what happened earlier? Market balanced out everything through here with everything through here. What happened before that? Market balanced everything out from here with everything through here. But do y'all see this pattern that's happening? Bounce left with the right, left with the right, left with the right, left, right, left, right, left, right, left, right. The market is balancing itself out. So when you're looking at long-term targets, if you're in a bearish mindset or a bullish mindset, pay attention to where, okay, if we had this huge move up, well, where did we really start from? What's the last true low we had before the market really made its move? Right here. Where's the last low that we had before the market made its move here? Right here. Because we pushed up and then we came down and then the market finally went up from there, taking all this liquidity. We pushed down. We took this last low before the run up. So then where's the last high? If the market's going to go higher, if the market's going to go lower, well then where could our next long-term target be? It would have been like here. This is the very last low that we had before we had this push up. Why? Because we took sell side, sell side, sell side, sell side, sell side. The market had a change, a shift in delivery. What happens now? Buy side, buy side, buy side, buy side, buy side. We kept taking buy side. It had a change in state of delivery. So the very last low would have been right here if the market wanted to continue pushing down. So we're here, market did a rebalance, first target here. Why? Because This is a major buy side because it's the very last push up before we had this huge push down. This is major buy side. We had this last push up before we had this huge push down. Let's do something real quick. Whoa. Let me want to find a good example. Okay, you see these four circles? I want y'all to tell me what's major liquidity and what's minor liquidity. Which circles are major and which ones are minor?
I think the first two from the left are major, and then the two on the right are minor.
Um, Everyone who's in here, I want y'all to type y'all's answer or say it. So The answer, this is major, this is major, this is minor, and this is minor. Now, with me telling you that, can y'all type y'all's answer why? As to why. Or do you want me to explain it? Exactly, Sam. Um, so this is major why? Because this is the last push up before we had this huge move down. This is major why? Because this is the last push up before we had this move to the downside. These are minor because they are a part of the move of the leg down. But this is the very last high we had before we had this push down. So this is minor liquidity. Yeah, that's why I did that, Crimson. I put this one there intentionally. I put this one intentionally because it is confusing to people, but I wanted to point that out. Now, if you're looking at a lower time frame, of course, all of them are it's gonna be different views. Now, of course, this one is more, at the end of the day, this one here is going to be more significant than this one here because we had a drastic move to the downside. But this one is still considered major liquidity because we had this huge push up before we had the pullback. This huge push. And then we danced around here for a little bit and we came back down. But this is still considered major liquidity. And then, I mean, if we sit here and go, just circle this, go to the 1 hour. Look at that. Looks different now, doesn't it? But you sit here and look at these. These are the same highs that I drew out on the 15-minute, and it looks different. That's why different time frames are highly important. But this is major liquidity. This is major liquidity. This is minor liquidity because it's part of it's in the move to the downside. Where did everything? There we go. Which one's major and which one's minor? Let's do this again, y'all. Tell me which one of the three are major and the others are minor. You want to take one more guess? One of them in there is tricking you guys. So yes, this is more significant. This is the most significant one. 1 and 3 are major, 2 is minor. 3 is more significant than the first one is more significant than the third one because this is really where the move started. But we have the push up followed by this major push down. We had this push to the downside, it followed by this major push to the up. This one's the minor one because it's still part of this move to the upside. If we were to go here, hopefully, I don't know if it's gonna let me go all the way back. It won't let me. Maybe I can do it on the 5. You see how this is still part of the move up after this? So this is major liquidity right here. This is minor liquidity. We have this push down, this huge drop, followed by an explosive move continuing to the upside. So this is considered major, but is it as significant as this one? No. So the market's still going to target this, but it's mainly targeting this because what it needs to do is it needs to balance out everything from here through here, boom to boom. So on a regular day, let's see here, right at market open. Sadly, right before market open, it took it on a Monday. But before the end of the day, we had taken this one. So this could have been a target. And then on Tuesday, the next day is when we finally took this. Of course, it was a Monday. Yep. Now I'm gonna do this last one on a 1 minute because I want to see what y'all think. Okay, what's major and what's minor? This time type your whole answer in one message. Waiting on Michael's posted. Crimson. One, two, three, four, 5. One major, 4 major. One major, 2 minor, 3 major, 4 major. Brandon agreed with Michael. 1, 3, 4 major. 1, 3, 4. Sam, 1 major, 2 minor, 3 major, 4 major. Sam. Uh, so this one's confusing. I want to try one more time. I want y'all to look at what happens following after buy side's taken. Which ones have the most drastic? What has the most drastic move? One is minor, two is minor, three and four are major. Let's go, KB. Okay. Yes. Yes. There y'all go. Yes. This can be this is a give. This one is because when you're watching this, we have a decent candle down, 800 to 775. That it looks like a big move, but we don't really have much action that happens through here. Is all through here is still kind of a little bit of consolidation. I mean, it's a little bit of a move, but it's nothing crazy. But what happens here? We have this huge drop, huge push up. This is the final time we take buy side liquidity right here. And then what happens following that? We rip down. Market comes down, we push up. So the last time it takes buy side liquidity, what happens following that? We rip down. Three and four are major. Which one's the most, which one's more significant? This one, of course. More significant than this one because this one's still part of the move to the downside, but this one this is where we took the last buy side before we ripped down, and this is on the 1 minute time frame. These two are minor, these two are major. Yes, it can be relative equal highs, but this is really where the move began. These are definitely relative equal highs, but this is where we really had the real move. And this is right at market open too. 9:34 a.m. So the market came, ripped up one last time, took buy side, and then ripped down. So would you say market would rather want the first one since they are relative? I mean, it's going to go for it regardless because what's happening is the market's going to have to balance out everything over here with everything over here. But the move really started right here. That's where the move really began in the market. So you know there will be bigger move before the candles are bigger. Yeah, well, so yeah, the market's going to go when the market comes through here, the market's going to overall target uh both these highs. But this one here is more significant because this is really where the move started over this one. But since they are relative equal highs, the market will still target both of them, KB. So we could see it only after the move happens. Does it help us being at 4 knowing that 3 was major? Or do we only use it way later as targets? Does it help us being at 4 knowing that 3 was major? Well, so the market needed to first come down and take sell side. Once it took sell side, it balanced. It tapped off this end dog, which means now we can target if the market's going to stay with end dogs, with opening range gaps, with opening week gaps. If the market closes through them, then you know it's going to push further, usually down to target liquidity on the other side. If the market's going to respect it, well then you know that the market's going to continue higher from there. And that's when you can use these as targets. This being my main target, because that is the very last high that we had before this huge move down. This was the start of it, of course, but this is really where the move took place. That's what makes this one more significant over this one. Now, you can target this one if you want to because they are $15 apart, if I'm correct. 90, yeah. They're $17 apart. So I mean, like, I wouldn't. It's based upon what you want to do in this situation. Um, I would really just focus on targeting this one over this one. That's only a $17 extra move right there, but it's primarily it's what you want to do in this situation. But since this is really where the move took place, is the last high before the explosive move down, this would be my primary target that I'd want to see. You can go for this one if you want to, because they're really close together, so the market has a high probability of taking them both. But this one's going to be my overall main target due to the fact that we had this huge push up, taken buy side one last time, and then we ripped down from there. So this is where the move happened exactly to take sell side liquidity. Does that help, Crimson? Okay. So, do y'all want me to do one more example? Okay. Hey, listen here, special needs. Don't talk to me like that. Oh my Lord, Brandon. Dang, KB, he just done throw you under the bus like that one. Yeah, I know you didn't. You didn't even say nothing. Uh, that's great. He be doing that to, have you be seeing what he does to freaking Nick in the channel? Nick don't do nothing. And then Brendan be hating and all this, and then freaking Nick finally comes in with these one-liners and then just drops the mic and leaves. Okay. Y'all type y'all's answers on these three. I'm hoping y'all all get it right. First two are minor, third is major, three is major, first two minor. First is minor, two minor, three major. First is minor, second is minor, three is major. Fucking let's go. All of y'all got that one. Beautiful. Yeah, y'all see what I'm talking about. I love it. Let's go. That is the very last time we took by-side liquidity before we ripped down. These could these are just minor liquidity points. I like it. Let's freaking go. Yeah, that's the perfect perfect gift right now for that. All right, last one. Let me know what y'all think. Don't trick yourselves on this one. Think this one through. Remember, we want to pay attention to what follows preceding that. That's three. We got two more people that need to answer. One more person. Brandon just good. Brandon, you just read them and just say if you agree or disagree. Nah, you good. Um, whoa. He's got Dorito fingers. Wait, who's he? You talking about yourself right now, Brandon? Anyways, yes, this is major, minor, major. Why? Because this is the last low we took before this push up. This is minor because this is just a slight pullback. And this is major because this is the last low we had before we had this push higher. Now, bro, my niece and her and the phone. That's why that's why this crap keeps popping up. My Safari keeps popping up. I don't know why it does that. It'll pop up and say something's not connected or it's blocked. Just randomly, it's glitchy. Um, yes, that's the last low, but y'all got that correct. So good job on that. Let's see if you can figure this one out. This one's gonna trick you. It's on the 1 minute too, so y'all know. So both major, first major, second minor. First is major, two is minor. Sam, you know this. I promise you, you do. You're a freaking killer trader. So the first one is major. Why is that? Because it's the last time it took buy side. Oh yeah, you in a yeah, it's late for you. And then the second one is minor. So you got that right. Beautiful job. Now let's go back to that was something else I wanted to talk about with you guys because KB, you remember the other day, um, I was talking about where was the last low we had before we had this explosive run to the upside, and it's right here. Now, of course, it really started it started around this area right here. But this was we were in a lot of consolidation right here through this area and into here. And so that's what made this one significant. We finally got it on Friday. But let's go back to the 4 hour and continue on. So we ran to all-time highs. So I've covered this with you guys. So we've taken all-time highs. We're still running all-time highs. Right here is when we finally made this move down. Now, targets could be any given one of these things. But what I want y'all to see is this high with these lows all through here. So if I am looking for the market to, if I'm trying to figure out where the market can possibly go as a target, and I extend this over, what do we see? Yes, it is a breaker, 100%. So if the market is going to take sell side at this point, because what have we been doing? We've been taking all this buy side liquidity. I'm not sure if you're being sarcastic or if you're serious. Because we all know why. Right after I said why, he says because we all know why. You have a blessed night, Sam. Sleep good, bro. But if the market's going to take sell side, we want to see where this lines up because that is the high that we have. Now, if the market's going to want to go lower, we can see it taking this. But my first focus is going to be this high to see if we tap into this and respect it. So I'm looking at the lows that we have that are around through here, which we got this one, and we got this one. Now, if we sit here and look, that's where it stopped at. So considering the fact that it came down and swept these lows, now did this happen in one day? No, this happened in the course of a few days. We have these targets on the way down. This is going to be the first target because it's the very last push that we had down before we had this huge move up. So that's going to be target number one. Okay, well, if the market's going to continue lower, well, then where do we have on the next push? Right here. And these are relative. We have this huge push down, and then we have this push up. Now, really, the real push up started in this area, but these are relative equal lows, so you can target this one. Okay, if the market took it, well, now if the market's going to want to continue lower, well, then what would be the next liquidity point? This one. Huge push down, and then we slammed up. So that's going to be your target points. Now, since we tapped into this breaker that's over here, what's the question? Why are these relative lows? Here and here? Because they're close to each other. So they're relative lows. What makes a relative low? The relative lows are typically within like 15 to 25 bucks. Relative lows are relative lows. They're relatively close to each other. So the market will want no, there's so when you have relative lows, you want them to be within $15 of each other. Like that's the closer they are together, the higher probability that the market's going to want to go for those. Like with equal lows, the market will loves taking those. Relative lows are still target points in the market, but the closer they are together, the better. That means there's more liquidity there. You want them to be within $15 of each other, but this one's 636, this one's 597, so it's about 35 bucks away from each other. But there's still a good probability if the market's going to take this one, it's going to take this one. You don't have to go for this one over this one. If you want to play on the more cautious side, you can. It's whatever you're comfortable with doing. But these are considered relative lows due to the fact that they are really close to each other. Now you can target this one if you want, or you can target this one. It's entirely up to you in that situation. Um, but so since we came down and tapped this breaker block that's over here, that tells us price is it's considered balanced below in the market. So what does that tell us that the market wants to do then? Well, so since we just made this huge move to the downside, and the market's telling us this breaker block over here is saying we're balanced below, well then what's the market need to do? It needs to balance out the left with the right. So then our target then could be this high that's up here. Now, of course, on a smaller time frame, you're going to have different targets. I'm sure you'd have a target here. I'm sure you'd have a target here. I'm sure you'd have a target here on a smaller time frame because this is the 4 hour. But the market always has to balance out the left with the right. So if it's going to do that, if it's going to push up, well, then we're going to see this high get swept. It's not a dumb question, bro. You wanted an answer to something that didn't make sense to you, and that's not a dumb question to me. I don't ever believe in that. I don't believe in dumb questions. I think it's all about understanding. There's never a dumb question. This is something that it's like going to college for something. Something may not make sense to you, and you just need a further explanation. There's nothing wrong with asking that, bro. I'd rather you ask something like that than to not know it. So let's look at this. So if the market just balanced out this side with the right, correct? Well then, what's the market now need to do? Balance out the left with the right again. Now, what do we see? Hmm. Because what we just did is we pushed up, market came down, balanced all of that out. Why was it considered balanced? Because of the breaker block we had over here. Well, now if this is balanced below, well then what do we need to do? Well, all this needs to be balanced through here. Okay, well now if all this is balanced through here, well then all this needs to be balanced through here. So what we're looking at now is we're just trying to find our entrance. Well, we have this first presentation fair value gap right here on this day. That's an entrance right there. What would our targets be? Well, of course, we're not going to reach for the moon because these are 4 hour candles and it took us days to get here. But Hmm. our overall target, if the market's going to consider to do, if the market's doing a rebalance to the downside, well then, where's our first presentation fair value gap? Right here. Why are we not using this one that's right here? Because this candle right here tapped into it. See? So that brings us to our next inefficiency. Well, if this one's been touched right here, well then what's the next one? This one right here. So if this is balanced down here, well then the market, now that we've balanced everything from here with everything here, well now if the market's going to push down this direction, well then what can our targets be? Our target can be this one initially. This is the very last low before the explosive push up. Then our next target can be this one. Last low before this push up. And then our target can be this one. And then seeing that the market came and tapped into this last presentation. I mean, first, this fair value gap that hasn't been touched yet. Well, then that's where we can decide, that's where we can find out if the market is going to continue further down. Because it came down, touched all this, and then pushed back up because it balanced all of this through here. Well, if the market's going to want to come down and take this further liquidity, well then since this is the last fair value gap that we have that's untouched, we need to see how the market how the market responds off that to figure out is it going to push further down or are we going to have push further up now? Well, the market tapped off of it here, and that tells us, well, then that everything from here down is balanced, tapped into that last inefficiency. So what's the market going to want to do next? Market's going to take all this that was ran through here and balance it all through here. And that's what we see. So what will our targets be? Our target would the first major would be this one. Now, I mean, of course, you can target some minor liquidity through here, and this, honestly, on a smaller time frame, was probably considered major liquidity, which we can actually look at. Let's check it out. I'm not sure if is that the one I drew? September 1st. Oh, I'm not gonna be able to go back that far. Never mind. Um, not on the 15-minute. Well, I might. Yeah, I can actually. Cool. So I wouldn't consider this major. I'd consider this major right here. This is where we really had the big move. So I'd be targeting this on the way back up. This would be minor for me. This would be minor for me. This would be major. And this would be major. Because that's the very last, that's the very start of this push down. This would be major because of a huge drop. Um, but these would be targets going back up because it's gonna need to balance out now the left with the right. Just bounce through here, bounce through here. Bounce through here, bounce through here. The market then continue to push up to all-time highs. And this is where we get into more recent what's been going on. What's up, initial? So market ripped down from here. We had this opening week gap that's right here. This happened right before market close. I don't know if anyone remembers this day, but market came down, took all this sell side liquidity. Why is it not? Ended up using this breaker right here. And that's where we basically ended at for the day. Hmm. So if this tells us right here the price is bounced below, well then what can our next target be? We gotta balance out now the left with the right. So we have market open Sunday night. We pushed higher. We came down, tapped off this fair value, this opening week gap. Hold on 1 second. Oh no. There we go. So market pushed back up. Remember, our focus is balancing out up here. So the market tapped in, and I'm gonna have to go back to the 5 minute to show you guys why it stopped where it did, so y'all can see it. You see these highs that are right here? Market tapped off of these 5 minute highs right here, and that's why it stopped where it did. It considered price balance below at the current time, which is why it pushed higher. So it didn't have to go lower. So where would our next target be? Up here. Market pushes up, takes it. We have this pullback down into here, where this low taps off of these previous highs, specifically this breaker block that's right here. So price was considered balanced below. Market came back up, took this high. You know what? If the market wants to go down now, it can take this low. This is the very last low we had before this push up. So what's it going to do? It's going to balance out left with the right. Ah. And this is on the 5 minute, so I'm just showing smaller intervals. Really though, what it's overall going for is balancing all of this with here. It's just at the current time right here, price was considered balanced below, which is why I went for liquidity to the upside. It doesn't, just because you see it respect a breaker, does not mean that the market will not go back for it, close through it, and take liquidity to the downside. It's saying what that's telling you is at that current time. Yeah, we're still good for a one-on-one today. Oh, he may be gone. Yeah, he gone. At that current time, market is bounced below, so that's why it went for liquidity. If it closed through it, it would have came down and taken this. Market wanted buy side one last time before coming down and balancing this out. But don't forget our overall target long term, because that's what our focus today is overall long-term targets is up here. Because market came down, we tapped into this breaker. That tells us prices bounce below. As long as it respects this breaker, well, then we're going to go for this. So that's my overall target. Market pushed up, came down, took sell side one last time in here, and then came up by that buy side. We pushed back up in the all-time highs. So what's the market going to want to do eventually? Well, now that we balanced out everything through here, everything through here, now we need to wait for the market to do its little dance in all-time highs and then come back down and balance things out. Well, we left this opening range gap open, have not been closed yet. So this is a target. So you don't forget that this is still a thing right here that we want to see. But if the market's going to balance everything out because of that, because we left this opening week gap, all of this needs to be balanced out. When did it happen? It happened through here. What did it do? Did not respect that order block, I'll tell you that. But it did respect this one. It respected this bullish breaker right here. So that tells us price is balanced below. So we closed through this opening week gap. We balanced price out with the left. We tapped into this breaker block, telling us price is balanced below. So then, what do we overall want to see next? Well, as long as we maintain the last since Christmas, bro, it has been trash. This has just been annoying to me. I don't know about you guys, but this has been the most terrible PA I've ever dealt with in my life. Usually you see stuff like this, beautiful, clean moves. We have stayed within a tight 2630 to 25. We stay within an $800 range for since freaking December 18th. And it just bothers me a lot. Try gold. I trade gold. I have open contracts on gold still that I've been letting ride for a while. So we balance price out. This tells us price is balanced to the downside. We stayed above 50%. What's our first target going to be? Where's major liquidity? Right here. These are relative highs, so you could attack both of them. Following that, what's our next target going to be? Here and here. The market's going to continue pushing higher. That's how I get these targets, Michael, because if we're balanced below now, well then as long as we respect that, the market's going to want to push and rebalance all this out because it has to balance everything from here with everything here. So then my long-term target is going to be this high. Okay, it took this high, so where could my next target be? It could be right here because this is the last push up before we had this huge push down. So that's going to be my next target. Target this as well because it had a major move down from there. Well, as of right now, we have these equal highs here that we're so close to getting to, and it's starting to annoy me because I have 5 open contracts on NQ. I'm just waiting to. Nah, Brandon, you're not allowed to head out. Sorry. I'm about if you can stay like 5 more minutes, this is the end of it right here. If you want to. Otherwise you can go. It's fine. It's up to you on that situation. I know you got family and things to do. Well, put me on speaker. You can listen to it. No, you're good though, brother. If you gotta head out, you're fine. So these would be my next targets going up. I want to see us push back up into here, but right now with where we are, um, my next target is this area because we have this high, this one, and this one. All these are so close together. They're relative highs. And we're still in a bullish up move overall, so I want to see them. But we pushed up. Now, if you look here, you have this low that's right here. The market tapped off of it with these highs. It tells us price right now is balanced to the upside. Doesn't need to push higher at the current moment. That's why we stopped each time through here. So what does that tell me? Well, we're balanced to the upside then. Well, then my targets need to be to the downside. So if we're going to start with the first place, well then we want to balance out the left with the right. It did that. Pushed back up. Next target through here. Next target's through here. Now, this is where I entered the trade because we stayed above 50% of this wick, which is what tells us price is bounced below. Market considered price bounce below. So then where are my next targets going to be? Here, because this is where we had this huge push down. It's going to be major. Same with here. That's the next major target. This isn't a major target. Well, then after that, what's my next major target going to be? Up these up here, which I still expect us to for it to deliver. I just, in my opinion, I feel like we may see it freaking for FOMC, honestly. FOMC is coming up here soon. Uh, you're okay, initial. It's all good, brother. Now, so the market is tapped into this fair value gap. So that's this one has been mitigated. It did tap into it again right here and respected it, but it also tapped an order block right here and respected it. So if that tells us that price is good to the upside right now, well then now we want to pay attention to the downside. Now, on this move, we had a lot of dancing around through here, through this area. In my opinion, price really started moving when we were right here. We had this push up, push down finally, and then this huge move up. So what did the market do? It came and balanced that out. So my targets initially would be here, the close of the new week opening gap. Next target would be here. Next target would be here. Well, if we are considered balanced now below, what do we need to do now then? We need to balance this all with this. So my first target is going to be this major liquidity. And you can target the ones that are running up through minor, but then this will be the next target because that's the start of the down move. The last high we had. Now, when a candle taps off 50% of a end dog or an opening range gap or opening week gap, it can consider price balanced below or above by tapping off 50%. And it did that here at market open. So what happened is, of course, we targeted these highs going up. But market came up, balancing all of this through here. Well, now if it's balanced all of this through here, we just need to find then the opportunity for it to now balance everything through here. It tapped off the 50% finally, and that told us price is at the time considered itself balanced above, which was then when we can find our entrances to short here, 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 here. And then the market tapped off this end dog. Or is that an opening week gap? That's an opening week gap. Yeah, this is an opening week gap, not an end dog. Telling us price is balanced below. And so it came back up to take these highs. And now we're just kind of in this little area through here. We had relative equal lows right through here, which is why we took them on Friday. Price tapped into this first presented fair value gap right here before this explosive move up. And that's why we stopped where we did, and we've just been consolidated kind of the rest of the day. But I mean, that's basically it, guys. I don't know if hopefully this helped being able to kind of see long-term targets, because the main thing you're wanting to look for in these situations probably shouldn't have done that. Is just the rebalances. And then why would price be considered balanced to the downside? And if it's respected that, then now we're gonna go from here, rebalance everything to the upside. And now that it did that, what are we going to do next? We're going to balance everything through here to the downside. Now, I'm not sitting here to say, okay, I know the market's going to target this whole area, but I'm looking for where we have major areas of lows where we had explosive movement. So where would be the next draw on liquidity? So, well, if price is considered balance above and we're going to take sell side now, next draw on liquidity would be through here, through here, through here, through here, through here. And then during this process, you're watching, you have to look through the charts and see where could we possibly stop? We stopped here. This breaker telling us price is now considered balance below. So what's the market going to want to do? It's going to want to over time balance all of that with all this. It's just a pattern. Balance out the left with the right, balance out the left with the right, balance out the left with the right, balance out the left with the right. Market balances out the left with the right. Again, left with the right. Market balances out the left with the right. Market balances out the left through here with the right. Market balances out everything through here with everything through here. Market then goes and bounces out everything through here with everything through here. Market bounces out everything through here with everything through here. I mean, like, even if I was to sit here, I could sit here and do this. We see the market, it balanced out everything from here to here. And then it pushed higher. Why did it stop here? Because it considered price balance below. Balanced everything from here to here. Market balanced out 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 everything from here to here. And then went higher. Market balanced out everything from here to here. You can see it constantly is balancing out things with the left and the right. And where it stops at is due to either a first presentation fair value gap, an order block, a breaker block, a, a an opening range gap, a new week opening gap, an end dog. It's considered price balance, so it's then it can go the other way. But you see the market is just anything that happens on the left happens on the right. We look at it long term, like I was showing you just now. Everything that happened through here got corrected through here. Everything that happened through here got corrected through here. Everything that happened from here going up got corrected finally through here. And the reason we stopped there was due to a breaker. So when we stopped there because of a breaker, well now if we have a bullish mindset, well then we have our targets going up. So what's the market going to do then? It's going to balance out everything from here with everything through here. Of course, we're not going for the long-term goal, the haul. We're targeting these major liquidities and these minor liquidities along the way. But you see it just, it's repeating this V. It's repeating this process. Again, everything that happened from here was fixed through here. Why did we stop here? The breaker block that's over here on this red line. Okay, well, that tells us that price is bounced below. Well, then what are we going to want to do? The market's going to want to correct all of this, these inefficiencies and all this liquidity by going up and taking that. Okay, the market took all of that. Well, the market wants to go down now and balance all of those areas out. What happened? It did that. And it stopped at this first presentation fair value, this first fair value gap. Okay, well now if the market's going to do that, what's it going to want to do? It's going to want to balance all of this out with all this here. What happens here? The market balances out everything from here down. What happens after that? The market balances, oop, wrong thing. Market balances all of this with all of here. What happens next? The market balances all of this with all through here. Pushes back up. Overall, though, what it's really doing is it's going to balance everything from here down. What's the market doing next? It's going to want to balance all of this with all this through here. We're just dancing right now, though. And it's the last three amigos. But it's nothing crazy. That's how I'm getting my targets. Because all I'm doing is saying, okay, if the market's balanced itself out in this area, well then what will happen next? Does that make sense, Mike Crimson? Does that help at all, Mike? Do you have questions? Am I confusing? Did this give you any clarity?
Yeah, so it helped a little bit, but like say like you have some bullish targets you're looking to hit, right? Some buy side liquidity. Like how do you know when the market is like, because like sometimes the market just continues higher. Like how do you know if it's gonna like change to start looking for sell side? Because like I know like sometimes like Riz like we'll be bullish and then like Riz will be like, well we got these targets down here that I'm looking to get hit. I don't know if that question makes
Yeah,
sense to you.
but when
Oh, actually, I can probably draw it on your screen. Like if you leave your screen like that, let me just draw. Um, so you see how like we had this move down, right? Oop, let's see. Let me erase that. Yeah. So we had this move down, right? And then we've rebalanced up to this point, right? And then started to go down again. Like how do we know that we weren't gonna like aim for these relative equal highs before going back down?
repeat that question one more time.
Yeah, so like we had that initial move down and then we
Hmm.
rebalanced this way, right? But how do we know
Yeah.
that the rebalancing was going to stop here and not continue to rebalance higher for these highs, for example?
So are you asking like why did we stop there?
Yeah, like how like is there a way to tell like when we're switching to bearish? You know what I mean? Like 'cause like we switched to like a bearish move down in that area. Like how do you know?
So I think out loud. So all of this through here is going to get bounced eventually. It just is a matter of time. I can't tell you exactly when it will happen, but I mean, the only real way you're gonna know is paying attention to higher time frame stuff. Like we have this low that's right here. And I mean, truthfully, it's not even this low that we're using. It's this one. Wait. No, it is. It is that low. I'm sorry.
Oh, can before you
Um,
continue,
we
can I
tapped
just
off of it.
yeah, can I ask you something before you continue?
Yeah.
So, like, so if we had gotten above the 50% level and closed above
Uh-huh.
it on the 4 hour, you would target these like relative equal highs?
Yeah, there's
Okay.
a high pro there would have been a high probability that we would have seen those highs be swept. But considering the fact that price went off that low, and stayed under it, that tells us right there that the market's gonna push back down for some inefficiencies to the downside. So like I can't sit here and tell you I can tell you this. I can tell you this is gonna get balanced out. That I can promise you. It has to. But at, when all this happened right here, the market considered price balance to the upside at that time.
Okay, that answers
It
my
doesn't
question.
mean it's
Yeah. That's actually what I
it doesn't
was
mean it's
trying to
not
figure out.
going. Yeah, it doesn't mean it's not going to not go for it. It means at that time price is considered balanced to the upside and it's going for more sell side liquidity because it left some inefficiencies behind. What'd the market do from there? It went back down to here, stayed above 50% of this wick, and pushed back higher.
And that's why you took longs because it was staying above the 50% in that area.
Yep.
Okay. Yeah,
Uh-huh.
so that
And then
actually answers the question I had.
I also went on the smaller time frame. I spent like 30 minutes, 40, like almost an hour beforehand, um, looking,
Could you go down to
checking
the
all
smaller time
this.
frame and just show us what you looked at before you entered?
Yeah, we
I
can have a look at this consolidation.
I posted it in the channel.
Oh, you did? Okay, I'll have to go back and review it.
Here, I'll show you it right now. Um, it's either in league trades taken or let me find it for you. Here we go. I need to change my stream. There you go. Can you see it now?
It's still on the trading view chart.
Can you see it now?
No?
Oh,
Oh,
now,
yes.
yeah, now we can see it. Yeah.
Uh, so honestly, well, I did go through this once with you guys. Um,
Yeah, I think
I'm
it
just gonna go
was
through it.
probably because it was back in December at the time. Like, at least me personally, I really wasn't good with the balancing stuff, back then.
Yeah.
So I probably just
Honestly,
kind of like skipped over it.
no, you're good. But I'm just gonna go through it with you guys again. So yeah, price pushed up. It considered price balance through here, which is why we pushed back down. It hit 50% of this wick, which tells you price is at the time considered balance below, which is why we have this push higher. Um, right now we're on this end dog through here. So price more than likely is going to push back down a little bit. But what made me enter this trade, I wish we would just get out of this consolidation though. It's bothering me. So that's the 4 hour. Drop down to the 1 hour. So the fair value gaps we got on the 1 hour, this one's been touched through here. We have this opening week gap that's right here, but it was tapped off 50%, which means it's considered balanced. Doesn't always have to close it. It can come back to close it, but it doesn't always have to. But that's why price went higher because it tapped 50% of it. And then we got this fair value gap, but it's been tapped into already. So then I went down to the 15-minute from there. And actually, that's not an opening week gap, that's an opening range gap. I apologize. So this one's been touched. That tells us everything to the downside is good. What we have to do now is look at the 15-minute fair value gaps. We got this one right here. We got one right here. We can get rid of this. Everything is good through here. This one's good. We got another fair value gap that's right here. And we got another fair value gap that is right here. And then there's nothing else at downside. This order block's been touched. This order block's been touched. This order block's been touched right here. So these are the only things that are still in play. So we go to the 5-minute. There is no fair value gap through here, as you can see. You get rid of that. If I remember correctly, I can't go all the way to the 1 minute because it's so far back. No. What day is this? November 21st. There's no fair value gap through here. Hmm. What? It won't let me drop down to a smaller time frame. Um, well, I don't know how to show you then. On the smaller time frame, there's no fair value gaps here. It's for some reason when I viewed this data, I was far back enough on time where I could still view this on the 15-second and the 5-second charts. Considering the fact that this was back in November and we're now in January, it's too far back for me to be able to view. Um, on the smaller time frame in regular mode, and replay mode doesn't let me view it on the smaller time frame. I don't understand why it doesn't. But these fair value gaps had been tapped into. So everything below was balanced. So I didn't, so that's what made me enter the longs there. But I mean, yeah, that's the gist of it, really. Um, Price overall is going to need to come back and balance all this out. It's what I want to see. My target's these equal highs that we have through here. I'm just waiting on it to happen. Do you have any questions?
Oh no, I'm good. I'm not sure about Crimson.
Yeah, I think I'm good as well. Just need to sink it in.
Did this help you, Mike, at all?
Yeah, especially like the last 20 minutes or so.
Okay, because I feel like I word vomited like a lot. I don't know if I was hoping hopefully it made sense with everything I went through.
Yeah, I honestly thought that you were using like fibs and stuff to get the higher time frame targets, but now I see it's just the major and minor liquidity on like the higher time frame chart that you're looking
Now,
at.
yes, but remember, I am still using fibs to see if price is balancing, doing rebalancing, so stuff like this. I'm still using breakers. I'm still using stuff like that because, like for this example, there's a breaker right there, but we swept that. We swept what I wanted to see because everything from here was balanced through here, and then when we respected this breaker, that told me, okay, well then price can go back up now and balance everything from here with here. It's going to take time. It's not overnight. This is how I set up my long-term bias on things. And then when I see price do something like this, then I'm like, okay, well then what can we pull back for through this area? And then when I see price do this, I'm like, okay, well then what can we push up for through this area? Does that make sense?
Yep.
Okay. Did that help? Don't disagree with me. Like, did that help?
No, it definitely
Like,
helps. It definitely helps.
was this
It's just a lot to
what
look at.
yeah, was this what you were kind of hoping for? Like, did I give you the information you were seeking?
Yeah. Yeah, I mainly wanted to know like how do you know when the market is gonna like turn around and start looking like switch bias, right? And basically like you
Yeah.
say, you came down, you swept that bullish breaker, so now you're looking to be bullish, and then like you were looking at the fib on that wick at the top to see if you were closing above 50% or not. Like that's basically like what I was confused on.
Yeah. And I start with the 15-minute, man. You don't need to use the 4 hour. I use the 4 hour just to show you guys the bigger picture. 15-minute works great. I always use the 15, and if the 15-minute isn't showing me what I want to see, then I'll go to the 1 hour. And then if the 1 hour isn't showing me what I want to see, then I'll go for the 4 hour. But typically I can find what I'm looking for on the 15-minute.
Oh, before you go, I have a question. It's a little bit like off topic from this, but
Okay.
like say you're on a 4 hour chart, right? And you pull your
Uh-huh.
fib with the quadrants on a wick from the 4 hour chart. Do you
hmm
have to stay on 4 hour chart to look for candle closes above or below that 50% level? Or because like I've noticed sometimes that like you will get a close like below a 50% level on like a 15-minute time frame, but on the 4 hour time frame it'll have closed above. Like, you know what I mean? So like can you only use the fibs like on the same time frame that you're looking for the candle close?
So yes and no. What matters if you're going to use a different time frame, what matters most is what happens on the bigger time frame, you know?
Oh, okay.
Um, so it's very important. But like, let me see if I can find an example for you. Oh, we're on the 1 hour. Bum, 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 bum. Hard to do this because the candles have already done their thing. This might work. Yeah, I mean, this works. So like a situation like this, what matters a lot is what happens. If you're using a 5-minute bullish fair value gap, the most is very important to see what happens on the 5-minute time frame. But if you just see the 1-minute candle will react off of a 15-minute fair value gap and a 5-minute very fair value gap the same way. And if you just see that 5-minute fair value gap or 15-minute fair value gap just get disrespected, well then you can you can actually just go ahead and start looking for your entrance on it. You don't have to wait till the 5 minute candle close. Because like you see here, we have that 5 minute bullish fair value gap right there, and the market just slammed down through it like it just wasn't, it ain't shit. And then it even used it afterwards to push further down. Does that help?
Yeah. So we
I'm
give
sure.
we
Let me
give
see if,
preference to the higher time frame, but if we see like massive like disrespect on a smaller time frame, we can like assume it's gonna disrespect it.
yeah, like, let me see if I can find another one for you, like with a 15 minute.
Oh, Crimson was asking a question in the chat.
I missed it. I'm sorry, Crimson. For some reason, I had the chat closed. Makes sense. Can't massive disrespect on 1 minute get reversed on 1 hour time frame though, if it wicks basically. I'm not sure what you mean.
Oh, like here you were showing us M1 on the M5 FPG, right? And F1 like disrespected. Well, basically what I'm saying is like 1 hour is 60 minutes, and if it takes like 2 or 3 minutes for the price to go somewhere, right? And then during like other time remaining of this hour, it can basically just go back and create this like long shadow week, but then it closes, like with respect of the FPG or whatever.
Oh,
It's
I mean, 100%. It can, you can, you can have a 1 hour fair value gap, but inside that 1 hour fair value gap is like one of your targets, one of your sell side or buy side targets, and it can, it can run through that fair value gap, take that buy side target or sell side target, but on the higher time frame, still be respected, and then it can come back and create this long wick, and then still go the other direction. So you are, no, you're 100% correct on that. Um, just sometimes though, like higher time frame fair value gaps and stuff, there's still liquidity inside of them that needs to be taken. Um, but so it's like I said, it's really person to person on that. But for me personally, I don't use like if I look I use 5 minute and 15 minute fair value gaps, order blocks, breaker blocks. I don't really pay attention to the 1 hour or 4 hour stuff. I use the 1 hour and the 4 hour only if I am looking at the 5 or 15 minute, I'm not getting um clear direction or clear like clearly seeing clearly what I want to see on my chart for my targets. Um, but that's just what I do. I'm not really using 1 hour fair value gaps and 1 hour order blocks most of the time. Um, Now I will use those every now and then if we're at a certain place in the market. We're at a certain point in the market where we are at all-time highs, or we're at these really dark low, deep lows. Well, then I'll draw out OBs and fair value gaps. at these places to see, okay, is the market going to respect that, disrespect it, or what? But that's typically when we're at the tops and we're at the bottoms that I'll pay attention to the 1 hour and the 4 hour. Uh, Inside the middle, I'm not paying attention to it as much. It's mainly at the tops and the bottoms that I'll pay attention to it on. Um, because that's where it's most important to me are those areas, is the tops and the bottoms. But you are correct. Um, but that's why I'll use 5 minute and 15 minute. Because if we're on the 5 or 15 minute and it just gets ran through like a cheerleader on a football team, then it's most likely we're gonna see the continuation regardless. And I mean, like you got to see it just get full on disrespected. But yeah, I mean that's basically it, you know. I mean, you want to pay attention, of course, if you're going to use a 15-minute fair value gap or a 5 minute fair value gap, you want to pay attention to what's happening with it on that time frame. But like you can use it on the 1 minute if you just see it just get full on disrespected. I think I drew this one already. Trying to find an example. Yeah, I got you, Crimson. We can do that, brother. It's not a problem. It's so hard to freaking find this stuff because the candles have already taken place. 9:30, 9:30, 9:30. Because I have plenty of examples. I've done it plenty of times, but it's hard just to like see it right now, considering the fact that these candles are already there. Whereas, like when I'm watching the market, I'm watching it respond inside these fair value gaps. Because I've entered off of trades where the market just disrespects the crap out of a 15-minute fair value gap. Oh no. Wait, what? Oh, that's January 1st. That's why. All right, let's just see what this looks like on the 1 minute. Wow. Okay. Well, that's weird that that somehow ended up over there. There you go. Market open hit. We hadn't closed to the fair value yet, but then we went down and we used it to push lower. Disrespected it at market open. Same with this. It pushed up and then came and used it. Oh, wait. This one wouldn't be a situation where you would use it. Here's one. We came up, tapped off 50%, used it to push higher. Here's another one we pushed up, came down, used it to push higher. And that was only at 9:36, so it hadn't even closed. You didn't even have a candle close yet. Here's another one. We disrespected it, stayed under 50%, used it to push lower. I'm not even sure what the frick this is, honestly. January 9th. It's not really one I'd use. Well, we closed through it at that point. Came down and we used it to push higher. Couldn't really use this one. At this point, the market had closed through it, so you could have used it to trade off of. I don't think there's any others that I have. Yeah, but as you can see, it doesn't happen a lot. But there's sometimes when that does happen and then it uses it to push it. It's rare. Um, I mainly stick with with the 1 minute and the 5 minute. If I'm gonna do that, 15 minutes are just a little bit too much. What the heck? Oh, that's not the right one. I'm just trying to find some examples, y'all. I'm sorry. Okay, let's see what these look like. Oh, I just got a stretched and got a head rush. Well, it wouldn't work in that situation. Not in this one either. You just be gambling. It's rare when it happens, but it does happen every now and then. And I'm sure if I took the time to really find one, I'm trying to speed through this. There you go. There's one. There's two, really. Those were 5 minutes. Close to stayed on 50%. You even got to tap off this. Couldn't use this. You'd just be gambling. Would not want to use that. That's just awful. Closed through it on here. Came back and used it. So that wouldn't be a time. Used it here. Used it here. Couldn't use it here. You'd be gambling. Oop. Oh no. You could use it here. Market came up, took buy side, came back down, used 50% to push lower. Of course, there's other things though that are on that 1 minute that are kind of acting more into play in your favor. Came down, closed it, then started to kind of use it more here. Kind of used it here. Again, there's more things that are playing into your favor on this 1 minute chart. I mean, that's it. It's better to use the higher time frame as you can see because it's more rare, but it does happen every now and then. Is there any questions you guys got? I gotta get ready for my next stuff.
No,
And I
I'm all
gotta meet
set.
with Crimson. Did the day help at all, Mike? I hope it didn't confuse you.
No, it helped. It helped.
I feel like I didn't do that great.
Well, it was more like the question I had really wasn't complicated. I just wasn't sure how you were going about it, like getting your higher time frame bias and targets.
Yeah, I'm just looking really for those rebalances to tell me that the market can have a shift in direction. And then as you can see, everything balances out itself with the left, with the right. And then all it is just you looking at the tops and bottoms to see if the market could rebalance there and push the other direction. That could complete it. Stuff like that. It just takes time. I hope it helped. I feel like I didn't really help.
No, it helped, and I think especially for like anybody who's going to be new who's joining, it's going to help them to like see this stuff like early on.
Yeah. Well, I don't want them to be trying to focus on this stuff. They need to be focused on fair value gaps. This stuff just adds to the confusion. The more you learn, the more harder it gets until we simplify it into an easier thing. Like Anupam, Anupam, he only takes trades, or Anupam, he only takes trades off of the rebalances. I don't know if you've noticed that his post.
Yeah.
He's on, and I showed him how to look for rebalances, and that's the only time he'll take a trade. I don't see him post fair value gaps. Well, he uses them, but like his main start for an entrance is a rebalance. The biggest thing I can tell you is you get your bias, and then you either wait for buy side or you so you're bearish. You wait for buy side to get taken, sell side to get taken, retrace, you enter. Target next sell side. Or you're bullish. You wait for sell side to get taken, buy side to get taken, retrace, target next high. That's the basic entrance. Now, the next form of entrance is a rebalance. So, like a low off of a high, or a high off of a low. And then you just use your bias to enter there and target the next high. Those are typically like the two best entrances you can find. But yeah, I got to meet up with Crimson now. So if there's no more questions you got, then hopefully this helped you today. I feel like I kind of word vomited, but I hope it was helpful. If you have any questions or still confusion, we can get together. You need to talk with B if she wants to join a one-on-one. Otherwise, I'm just going to meet with you, Mike. She said that she would talk to you, but I don't think she ever got back to me on it.
Yeah, I think she wanted something for like, was it Friday of last week or like the week before? But like there was like scheduling conflicts. So
Yeah, I've been having to help Emma, so it's just been a little bit
yeah, I mean,
erratic.
yeah, I didn't tell her anything about that, but I kind of figured that's what it was. So I just said we could
Yeah.
just do it a different day.
She did ask me. I didn't see that. I feel terrible now.